Namaskar everyone, and Manish, a very belated happy birthday to you,
Very
and
much.
wish you a good health and a good life.
Thank you so much.
So, friends, a very warm welcome to everyone from the city of Bangalore. 24 degrees, clear sky, clean air, sun peeking through the clouds, and nature is looking at its best. And weekend after weekend, I've been stating that as we move to restart our economies, let's use this moment to think what we value, including reduction in emission and pollution. And what better session today to reinstate that fact, as we rebound, how to make our economic strategies and opportunities that can be more resilient, low carbon, and prosperous recovery. A very special conversation today on combating COVID-19 response, recovery, and beyond that we bring in partnership with Orix. Not only has COVID-19 pandemic had a serious effect on the lives and livelihoods of people in India, sickening thousands and increasing the nationwide unemployment rate. It has also caught businesses in India uninformed in a very unfamiliar situation and surfaced many challenges. And for many executives, COVID-19 crisis has been a wake-up call to address these challenges to growth and probably new business streams as well. And I have been speaking with CEOs of some largest, biggest companies, philanthropists, academics, and few influential individuals. And they all feel that overcoming these challenges won't be easy. But what is positive is that they're all reassuring that we're going to restart, and that is very, very positive around here. Shape of, and I was chatting with Sandeep yesterday, and I'm sure he'll bring this up during the conversation, but very briefly, the shape of India's economic recovery has actually gone from V to U to W-ish, and it's still not quite W-ish, to be honest, and but it's not even V anymore. Perhaps the W if a new outbreaks of COVID-19 starts appearing and the new rounds of mobility restrictions are established. Bangalore ended the one earlier this week. So folks, it's time to step up and not step back. And I like Delhi government's new motto: survive, revive, thrive. And if it is approached in the fashion it is projected, I think it is quite positive. And so COVID-19 pandemic has also revealed that our system's exposure to risks and challenges to rethink and redesign our economic model that is distributed and probably more diverse in the front. While the GDP is down, unemployment is high, there's an uncertainty of what the coronavirus will do next. A long recovery is the reality. In fact, I was listening to Prime Minister Modi the other day in one of the conversation with industry leaders. He pointed out that we should now focus on people and skills, and just not the technology. And the coming months and years are going to be more challenging in our lifetime for our economy, our society, and many of us as individuals. But what the crisis has also shown very clearly is that how much we rely on human skills. And I keep bringing this up because previously so-called unskilled and undervalued workers have been elevated to a key worker status. And I have few lessons that I've actually learned, and I thought I'll take this opportunity to share those lessons today. And my biggest life lesson that I've learned is that we have become more dependent on the skills of others. Whether it is our colleagues who keeps us focused and motivated and more productive, or our communities where people are working to stop the spread of the virus and to look out for vulnerable, and to our family and friends, so much so that we would have expected. And we have learned how much we depend on, we learn from them, and to get our things done. So, and I think that it's the others who bring the best out from us. And as we come out of this crisis, we need to really recover a new strategy. We need to find ways of making people more skilled and sustainable in the sectors which we want to really grow. There needs to be probably a change in the overall benefits system as well, which the government does. There needs to be economic planning at the local level, at the national level. Uh, and there needs to be focus on people and skills, of course. And the question now that is being explored is that where to start? The question that has been explored is that how do we assess when the rebound stage has arrived? How do we recover from coronavirus and its mental health? Does our beneficial system needs to get overhauled? The action that companies probably take today are going to set a kind of a benchmark for the years to come. And to touch upon all this and more, we have an outstanding panel of leaders today, and they don't need any introduction. But as Hari, my editor, keeps saying that no, there is a certain strict guidelines I need to follow. So allow me to do that very, very briefly. So we have Manik Dutt. He's the FMCG CEO and a very accomplished author. Manik wears many hats, and as he very says that in a daytime he has got a job which leads team and businesses in the corporate world, and in the nights he dons a hat of an accomplished writer. His books are the best sellers in India and abroad, including Alice in Wonderland, in Deadland City, Manik, and Snipper's Eye. He also very famously holds a black belt in karate. So Manik, welcome. We got Manish Jaiswal, Managing Director and CEO of Magma Housing Finance and SME business. Manish, with close to 3 decades of experience in banking and financial industry and heavy engineering industry, has specialized in building businesses grounds up and turning them around. He has got a deep skill and proficiency largely in the SME banking space. Manish, welcome.
Very much.
We got Naveen Chandani, Managing Director and CEO, PRIF Highmark. Naveen is a financial services veteran with experience in financial services and fintech industry, from credit information to payments to partnering various banks, NBFCs, and insurance. We have Pankaj Gupta, Senior Executive Vice President Sales and CMO, HDFC Life. Pankaj's role is not only limited to marketing and sales, but he also leads the credit life business, strategic alliances, digital alliances, CRM, corporate communication, and CSR for HDFC Life, and wide experience in the financial services space. And then we have Shashank Srivastav, Executive Director, Maruti Suzuki Limited. Shashank only breathes Maruti, and so that's
Did we lose Deepak there?
I thought for a moment, yeah.
Yeah.
No, you lost him.
And a dynamic Sandeep Gambhir, Managing Director and CEO, Orix India. Sandeep has led Orix to become the largest B2B car rental and a car leasing company and one of the largest employee transportation player as well. And because of his past experience, he has also expanded the footprints on the financial services space, as well through SME targeted secured lending. A very elusive and a passionate panel what we have today, and I mean, no doubt it's going to be extremely engaging and an insightful conversation. And let me hand over the screen to Sandeep, and I'll return back towards the end of conversation to have a little bit chat with all of you to know what's happening in your life otherwise. Sandeep, a very warm welcome to you, and I won't say the stage is yours, but screen is all yours.
Yeah, thanks Deepak. Thanks to you, Hari, and the CEO Lounge for the opportunity to get so many industry leaders on one panel and having webinars on some interesting topics on a survey we did. And a special thanks to you. Yeah, you're a true friend. When I forwarded you the introduction about everybody, there was the educational qualification also. I was actually worried. If you start reading that out, there is IIT, there is I am Bangalore, I am Lucknow, Symbiosis, I am, so this if my parents would be listening to this, they would have, I know what's coming to me. If beta thoda pad likh leta, so you would have also been a panelist right now. Because I'll be the one left asking the questions, and the better educated ones will have all the answers. So thanks for taking care of that piece, yeah. It makes my life simpler. Yeah. So thanks, Deepak. We'll get on with the show now. In terms of, you've kind of laid the context that yes, we've been all going through something over the last 4 months now, and somewhere in the middle of this, we kind of thought of putting together something as an engagement tool with the client base that we have. We said, okay, we'll try and put some questions. Those are questions on our mind for sure, and I think they're on everybody's mind. So we kind of put together a survey. The response was fabulous, not just in terms of the number of respondents that responded to the survey, but even in the profile of the people, the mix of the industry, as well as the size of the company. So we kind of had a good flavor of small companies, mid-sized companies, large companies. Similarly, in terms of the industry mix, so there's a fair mix of industries that also responded. So it was good to get a overall view of what's happening around. The reviews that we got were very good in terms of the content. I mean, the questions, the way they were structured and all that. And even better reviews on the way the charts and the presentation were there, the graphics that were kind of used in terms of putting this together. So a big thank you to the team at my end as well, a group of small youngsters who drove this initiatives behind the scenes. And here I am actually leading this to the next level in terms of the webinars. So we have, for the audience, we have a group of webinars planned in terms of the discussions that we're going to have from some very pertinent questions that are in people's mind. The theme is also fine. It's called Reboot. Amongst all of us at this level, amongst me and the panelists, I think as part of our corporate journeys, we've gone through a lot of situations, various scenarios, stress tests done, some critical business challenges. The other thing that has also happened is what comes along with these size of these roles is you go through a lot of trainings as well. Pankaj would vouch for it. INSEAD for one was great leadership in a VUCA world. But at least I can say that for myself, the situation that we are in, I never got close to a case study as well for this one. There was no case study prepared. When we prepare business plans and all, we do stress tests as well. I don't think this was ever a stress test scenario as well. Forget a real life scenario. So we are here right now grappling with the situation. But the good thing is, or I don't know whether the good or the bad thing, cases are around 50,000 nowadays. But the fear was much higher when we were 5,000 cases. When you go out on the street, the fear is actually much lesser at 50,000 cases. So that's life for us. Let's get on to the core agenda for today. As Deepak said, it's a very elite panel, handpicked for the diversity and the perspective that they'll bring, people from different industries. The headline for the topic today is response, recovery, and beyond. And we've, not just for us, everybody on the audience side also, we've been overwhelmed with the pandemic. Newspaper is all full of gloom. You have to really find some good news come out in the newspaper. But being the optimistic I am, I clearly see opportunities there. There are challenges for sure, but I clearly see a ray of hope at the end of it. And the light is becoming a bit more brighter as you go deeper into this tunnel. So, and I'm sure everybody is eager to get back to their workplaces, do what they do best, reboot and kind of rebuild. So I'm going to just start. There is no particular order, but I thought, let me start with Shashank. And, I'll tell you the reason also why I chose to start with Shashank. So for people who've looked at the invite, you'll see all of us trying to smile. But there is one gentleman out there who has a very, very infectious smile on the, on the print there. It's like somebody who seems genuinely happy. Given an opportunity, he'll love to laugh his heart out at the opportunity given. And I have a dear friend who does that. and I know how it feels laughing your heart out. So I think at this point of time, we surely need a lot of happiness around us. So who better than Shashank to start with the discussion today? Shashank, I just want to bring you into the discussion. The automotive sector has been in the news throughout the year, pre-COVID, post-COVID and all. And the upswings or the downswings in the passenger car sales is something that people closely relate to the health of the economy as well. When we reached out to people, a large part on the automotive sector respondents were there, almost 10% of the people. So while on an overall basis, we see 70% of people getting impacted negatively or severely by the pandemic. If I were to look at the automotive sector responses, that number is 85%. I mean, it's 60% in FMCGs, 70% in financial services, and 85% of the respondents on the automobile side. So you're at the forefront of all of this, leading Maruti to this where it is today. And Maruti's always made products which are mass market and they click well in the India and the Bharat if we were to differentiate. Yeah. And we're now talking about a farm-led recovery or a farm-led revival to the economy. I just want you to come in and share your perspectives with the larger audience. Where do you see us going from where we are right now?
Yeah, thanks, Sandeep. I would like to first of all start with the pre-COVID time for the auto industry. We were in the process of actually rebuilding when we are now in the process of rebooting. The rebuilding was happening because the auto industry last year had shown a dip after about 6 or 7 years of continuous growth. You may be knowing that the auto industry fortunes are very closely related to the GDP growth. And in fact, if you do a correlation exercise, the correlation coefficient comes to 0.9864, which is a pretty good fit, GDP per capita with the auto sales. And in fact, the year 18-19 saw dip, the GDP coming down, and the GDP 18-19 was like 6.1. Then quarter on quarter, it became 5.6, 5.1, 4.2. Q4 of financial year 19-20 was actually 3.1. So I think in response to that, we had seen a decline coupled with the fact that in the auto industry, the cost of acquisition had gone up because of emission norms, introduction of new safety norms, registration taxes going up, insurance going up. And there was also last year a little bit of uncertainty regarding the elections and the monsoons, which started off poorly. So we were actually coming down, and in the Q3 of last financial year and Q4, we saw a recovery. And thanks to a lot of efforts done by the industry, we were seeing some green shoots. And actually Q3 and Jan and Feb were slight positive for Maruti Suzuki as well as for the industry. However, then as we were coming out of that tunnel of a little bit of darkness, we saw the pandemic train coming from the opposite side, and it hit us really hard in the last week of March. And after the lockdown, there was absolutely no sale in the month of April. There was complete lockdown. The sale was zero across all manufacturers because the whole country was in the lockdown. Since May, however, we have seen some revival. The government allowed the business activity again. Showrooms started opening. For Maruti Suzuki, for example, now we have almost about 90% of our showrooms which are open. We have 3,100, out of which about 2,800 are open. So we saw pleasantly a sort of a quick bounce back, especially as you mentioned in the Bharat and the rural part, in the smaller cities, the bounce back has been much faster. So if you look at parameters of consumer demands, which are retails or bookings or inquiries, they are roughly around 80-85% of the pre-COVID times. So that is actually a good bounce back, and the bounce back is a little bit better in the rural areas. And I think the reason is that we have had a very good Rabi crop It's been a record. It's about 150 million tons that we have had Rabi crop. Even the Kharif sowing has been very good. Monsoon is up. I think about till a couple of days back, it was up about 7%, and the sowing of Kharif has been really good. It's about 20% higher than last year. So with about 800 million hectares of land already under sowing, the normal, remember, is about 1,000 million hectares. I think the sentiment is therefore much positive on the rural front. The reason also is that the COVID hasn't struck rural areas so much. It is the urban areas which have had seen clusters and deeper lockdowns than in the smaller areas. What we find is, of course, going forward, and your question, I think, pertains also what you look forward. What do you see the future? I think the bounce back has been good. There has been disruptions in the supply chain side, and so all manufacturers, all OEMs in the auto industry are actually scrambling to increase their production levels. We see future, obviously, the steady state demand will depend on the fundamentals of economy, will also depend on the sentiment. Car purchasing, by the way, is heavily dependent on sentiments, positive sentiments. We have what we could have the vaccine upside, or we could have the virus downside. And that is where the question mark is. So we believe that we're keeping our fingers crossed. The bounce back has been a little better. But we think going forward, it could be the shape of I think one of the panelists, I think Deepak mentioned what will be the shape of the rebound. So will it be a V or a W? There is also a J, of course. Then there is the Nike swoosh, where you have a small dip and then you have a steady growth. You could also have a U. You could have a L also, as some doomsdayers are predicting. So it falls down dramatically, stays at a low level. That's a L. You also have, of course, a bathtub recovery, where it falls down, stays a little bit low for some time, and then climbs up back again. So what will be the shape, a V or a W or a L or a J or a bathtub or a Nike, is really something which we need to debate. And I was thinking that while we have used almost all the alphabets, maybe in line with the Atmanirbhar thing, you can talk about the Varnamala of Hindi, and maybe you can even look at whether, if somebody is to ask me about the Hindi Varnamala, I would say it will be a La, which is it comes down and then bounces back again. And future depends on which, whether you see a COVID upside or a COVID downside.
Thanks, Shashank. I think, yeah. In fact, on that point, I was actually discussing with my son. He was saying, kids come with a different perspective. I was saying the shape of the recovery curve is N. So it's like, and then he came up with the stupid thing, Papa, when N gets tired, he'll become a Z also and he'll lie down. So that is on the shape of the recovery curve. Everybody has a view. And, now you bring your trademark smile back on the screen. How do you manage that?
Which one? The smile?
Yes, or the laughter.
No, I think everybody smiles. Everybody has his moments of happiness, and also moments of where you have to be deeper in thought, surely. So I take the pressures. So that's one way of.
I'm sure people in Maruti would be feeling happier with you around.
Thank you so much.
Okay, thanks for that perspective. I'll move on from here to maybe Manik. From an industry which is highly impacted on the automotive side, at least from the survey, where what I see is the FMCG space has kind of not borne the brunt, the staple space. People are still, being at home, they're consuming what Manik, we've been discussing. I think the important thing for a lot of us is we spend too much time on through the crisis. And beyond the crisis is what is probably more relevant. And that's when you can't stay paranoid, or the psyche of where we are in has to get over us at some point of time, and you start thinking about the future and how to take things forward in the right perspective. So from where you are, how do you see things shaping up specifically in your industry, and maybe your views on the shape of the curve, and leave it to you whether you want to choose the Varnamala guy, as Shashank suggested, or very soon I think we're going to run out of all the alphabets. A and B and all, thoda sa mushkil lag raha hai, but let's see. I'm sure we'll get there.
Thanks so much, Sandeep, and thanks for having me as part of this panel, Deepak. One of the things that I wrote back when I was asked to be here is we are all in our own boats. Our personal lives, our industries, our organizations are different, but we are all faced with the same storm. And I think in a context like that, it's wonderful to really learn from each other on how different sectors, different individuals, different leaders are navigating this, thinking about this. So, I'm just taking a leaf out of the theme of this webinar, which is response, recovery, and beyond. So I'll add a few more R's on how I think, organizations, leaders, and all of us as individuals can really think of getting beyond the crisis. I think the first one is reality, facing reality. Classical models of how people deal with anxiety or grief is, there's denial, anger, depression, and then you get to acceptance. And I think even today, all of us are guilty of it. You often hear people saying, when things get back to normal. And it's human nature. All of us wish for bad times to go away and things to somehow magically come back to the way they were in January or February. I think the first thing we need to do as leaders and as individuals and as organizations is to face the reality of this is where we are. If things do come back to normal, it's not going to be one magic switch. Some things may take longer. Some things may never come back to the way they were. So facing that reality helps us confront where we are and then focus, as you said, Sandeep, on moving forward. Once we do that, I think the second thing that's really important is reflection. Through the few months that we've all lived through this, what are we learning as leaders, as organizations and sectors? Some things are negative, but some things may point to the way forward. So if I look at the FMCG sector in particular, the FMCG sector overall is starting to recover. So the recent Nielsen report show that in June, the overall FMCG sector came back pretty close to pre-COVID levels. I think the exact number was 98% of pre-COVID levels. So there is inherent recovery and a rebound. However, the shape of that recovery and the way that's coming is probably very different from what it was in the past. And I think what's important is for leaders and organizations to reflect on what has changed. And if I look at it from a standpoint, I'll talk first for something that's maybe specific to FMCG and then something which is very common across many organizations is first in the FMCG sector, one of the key things that's changing is how consumers are relating to e-commerce. So the same Nielsen report shows that 62% of the respondents said that they're going to significantly shop more on e-commerce than they did in the past. And that's intuitive because of lockdowns, people are at home, but to some extent, those habits will stick. And I think organizations need to now think of how they're going to react to that and how they'll build capabilities to thrive in that environment. The second, from an organizational context, which we've all lived through, is working from home. A lot of organizations did it because of compulsion, but I think a lot of organizations are now doing soul searching on what have we learned. What are the positives? What is this teaching us about how work can get done differently in ways that are more efficient, creating more agile teams, creating more flexibility? So I think there's a lot of reflection we need to do. And then based on that, I think the final piece is how do we then recreate? I think success in a post-COVID scenario will not be, let's do what we did before and maybe do a little bit of it or a little less of it. I think it'll be, let's understand what we have learned. Let's try and recreate capabilities we need, invest in areas which are going to be critical to success in our sector. So, in the FMCG sector, clearly more digitization, more e-commerce, understanding how you can get more direct to consumer engagement instead of hoping consumers come to big malls and stores, because that may take a lot of time to build up. Recreating our organizations to be future ready. And the final piece, which I think is important in the beyond any sector, which I think is critical for all leaders, is recommit. I think the last 4 months or 5 months have taught all of us a lot. And for me, one of my reflections as somebody in the industry and as an individual is these are the times when you really realize why you do what you do. And I think, one temptation is to look at life through a P&L. Everyone's faced business pressures. But if you look at life through a P&L, you're just going to be focused on how do I make the numbers add up, and that can lead to incredibly myopic short-term decisions. Such as, look, I just need to cut costs and I'll be fine. I think the true test of leadership and character in these tough times is ultimately recommit and say, why do we exist? We don't exist just to make money. We exist to serve our consumers and customers who are relying on the services, products, brands that even in a small way make their lives better. We exist to serve our employees so that they can have a better life through the success of the business. And I think this is the time when all of us as leaders need to recommit to saying success will not be shortcuts, tactical moves. It will be accept the reality, reflect on what we need to change, recreate, and then recommit to building for the long term. And I think if all of us can do that, overall, I think that's going to help get the economy getting out. And we'll move away from the bad news of, people are impacted, jobs are impacted, to overall, we are recreating this together. So that's what I would hope for. And that's what been one of my reflections in the last few months.
Thanks, Manak. I think good insights, and I'm sure at the second part of the discussion, we'll come back discussing some of those steps, whether it's a myopic view on cost or focus on revenue for the long term and stay embedded in what you do. We'll come back to that as the next part of the discussion. I'm moving on from here. Let me, and both you and Shashank have spoken about changing consumer behavior. Things are looking very different. The customer wanted something else. The way he wants that to be served on his platter is very different than so digital is the way forward. And we're seeing all of that. We're seeing a lot of shift in the customer behavior as well. So let me try and bring somebody who looks at data more closely than any one of us. Naveen from Criff, 5 marks. Naveen, you look at data more closely than any one of us because that's your bread and butter. You provide inputs to more than 5,000 odd institutions that you work with. How do we get the reads on what's going on in the customer's mind? I was reading something about Google the other day. Google had printed out the makeshift in the thought process that's happening. We're also seeing some trends emerging. So let's say automobile sales were back 50%, and whatever I've been discussing with my friends on the OEM side, July looks even better. Is that pent-up demand, or is it something that all of us should be feeling happy about, or we need to see it till the festive season? There was news articles I was reading, digital spending is back to pre-COVID levels in terms of credit card payments and all. People are lining up for loans as well. So how do you see those reads from where you are? I'm sure you have access to a lot more data than we have.
Sure. Thanks, Sandeep, for the question, and Deepak for having me on this CEO Lounge. I think, like everyone said, diverse people is always good. So you started off, Sandeep. I'll come to your direct question, but you started off with a VUCA world, right? Now, all of us know VUCA typically has, volatility, uncertainty, complex, ambiguity. And I think today, like you said, we are in the worst VUCA. No one ever expected this VUCA. But I think what we as, individuals, as people who run businesses, as people who run homes, need to see the positive side, and you kind of touched upon it. There's a lot of negativity. There's a lot of negative data that comes into the press. You spoke about 5,000 versus 50,000. What has changed, or what we can change, is the attitude. So if you take VUCA, and I was thinking, how can I make VUCA in a positive sense? V can be vision, okay. U can be understanding, C can be clarity, and A can be agility. Okay, so you just use the VUCA in a positive manner. All of a sudden, if you have this vision, what is the learning in this tough times? What can I see that is changing? So you spoke about digital. So I'm coming to that. Digital first is a necessity now. It is not a good to have. I'll give you an example. I think we all, Deepak said, all of us are learning more skills. And at times, there were things that you otherwise would do. In the lockdown, for example, we didn't have a washing machine. Okay. So we ordered a washing machine. After the lockdown got over, it got delivered. it had to get installed. Somebody had to come and install it. To pay that guy, I needed an electrician to come. Now, no one wanted to come and they had to buy things. So digitally, I had to send money to that individual, that person. I handheld him to download an app and start getting money through, wallets. So all of a sudden, everyone today, whoever it is in the country, Bharat or India, have to go digital. And we as organization need to realize that delivery of whatever we do has to be digital. So I think that was a big learning. The second thing you kind of touched upon is that we are never ready. That is true. And when you said that at the beginning, I was thinking, what or who is never ready? I think we always prepare for something, but we have never been hit so badly. So I wanted to give an example. I love the beach. I hope all of you do. I love swimming. I was just reading in today's paper that swimming may not be the best thing to do because it could be a runny nose, it could be saliva and stuff like that. So I don't know when I'm going to go back to the sea or to the pool. But there are these guys, at the beach. They are lifesavers, right? They are lifeguards. Are they ready that somebody is going to drown? I think that is the VUCA for them. They are ever prepared that something may happen sometime, that they have experience, they have the confidence, and they have the skill to save somebody. So I think we need to learn from such examples that how are we going to handle that? So now coming to your direct question on data. So Sandeep, what data is showing, obviously, I think I heard Shashank say there was zero sales in automotive because it was a complete lockdown. I think March last week, April first 2 or 3 weeks was total lockdown. I think the activities actually really fell very, very low. But the good part is Bharat and India, and we spoke about rural, there were some green zones that were yet there. So even data showed that the microfinance seemed to do well there. The green zones were bigger in the rural areas. But overall, sanctions of loans obviously went low because I don't know how many individuals as consumers were ready to go online and take loans versus how many lenders were ready to digitally give loans. So, I think April, if I take in personal loans, was approximately 25 to 30% of the monthly average. So that is one number. But having said that, I do believe right now, in this learning, as our business, what are we doing? So we are looking at different segments, and different segments will perform differently. So rural is one, urban is one, but unsecured and secured, very, very different. How many people are ready as individuals to take a big loan, a secured loan? And we'll probably get, Manish to talk more about that because, housing is a big decision. But for the smaller ones, I think the lenders may be looking up over there. But also we have to keep in mind the partners that I work with are also insurers, right? Insurance, like rural, I saw insurance also come up. There was a need in insurance and completely digital insurance, so underwriting there. Also, I saw that a lot of partners were keen to understand their customers, and we were also trying to understand their needs. So collection, reviewing their portfolio, who could be prioritized for an upsell, cross-sell. So we saw that. And lastly, I think what we did was work with our teams to enable this work from home digital, that at any given time, any of our partners need any kind of service, it is available. So, yeah. You're on mute.
Yeah, thanks for those insights, Naveen. And I think the trends that you mentioned are surely somewhat encouraging for Manish as well as Pankaj, because there is clearly some indication of the willingness to borrow and willingness to spend from a customer standpoint. And I think that's where it's important to bring in Manish into the picture from a willingness to lend standpoint. While we have a customer out there who's now started at least digitally shopping, uh, trying to scout for loans. How do you see the lending fraternity, the financial services, banking, NBFC fraternity ready for this? Because there are questions on people's minds. Are the credit screens going to look similar? Are the lenders worried about repayment capabilities? The going concern, which all of us took as a given, that assumption is changing. So how do you see the financial services industry playing that out? Manish, over to you.
Thank you, Sandeep. Um, I think we are going through three levels of reset right now, and they're yet to fully play out. One is the global reset, which means it's just not India; it's the entire globe, which has completely come to a halt, or rather came to a halt, and that is going to change the way international trades have happened. A lot of dynamics actually will shift very radically, in my view, and there'll be huge opportunity given the China trust factor, which will set in, and that will actually alter the landscape, in my view, perhaps much more sharply 6 months to 12 months from now. Then in the domestic uh, economy, everybody is going through a business reset as well as a personal reset. When I say business reset, it's for sure that in the last 3 months, which went by in the last quarter, people would be lucky if they have done 1 month of equivalent business, as I keep saying. And the next 3 quarters, you'll be lucky if you're able to do 2 quarters of business. Effectively, after doing a survey of more than 14,000 SME customers, we have come to believe that on annualized basis, most companies will report a 30 to 40% shrinkage in top line, if not less, but for the sectors which are COVID positive sectors. All those sectors which are COVID positive, which mean your nutraceuticals, pharma, medicine, masks, domestic consumption, all of that will actually would hospital beds and many more ventilators. I'm not getting into nitty gritties, but let's put it into COVID positive sectors. They are likely to do well till such time, as somebody mentioned, the vaccine impact begins to play out. The other thing is that within our own selves, there's a lot of reset for a aam admi who would spend 50,000 rupees on consumption. He's learned to live with a lower expenditure than what he was right now. And will he go back to the expenditure level what he was used to pre-COVID? I feel that most habits and patterns, if you sustain them for more than 2 months, they become your natural habits. If you really want to go to a gym and you really commit to yourself that every morning I'll get up at 6 and you do it for 2 months time, possibility is that on 61st day, if you don't go to gym, your body will actually say, why are you being lazy? I feel at a personal reset level, a lot of consumption economy habits will change and people will actually get more time. I'm sure they get more time now. They're spending less time commuting and actually doing their own personal reset. Having said that, how is that playing out in the industry? There's the positive impact and the negative impact. For somebody who has lost a job, obviously housing finance would come to a mind. But for somebody who's salaried, his salary is not cut, and he's supposed to be only working out of home, and he's working out a house corner, he would think, यार मैं 2 BHK है, अच्छा डिस्काउंट मिलता है 10-15-20% का, मैं 3 BHK क्यों नहीं ले लेता हूँ? So certainly people will just watch out for a little more time, but those demands will start coming up because belief is already in place that you can actually work from home and perhaps you can work better. I'm seeing in our own organization where we've taken very tough decisions, like where our large offices, we are actually planning, rather we are we will be taking action in this quarter so that we minimize on the office rental and office spaces. So things of this nature have really begun to happen. The consumption pattern is shifting. Very rightly, as Shashank mentioned, we see, for example, the northern India, Punjab, Haryana, peri-urban belts, there actually we are very close to 70 to 80% of our normal business. Yeah, we are stuck. We are hit badly in Gujarat and Maharashtra. MP seems to be doing well. Tamil Nadu is struggling. Andhra Pradesh, Telangana, they are relatively fine. West Bengal is kind of is a slow grind. So all put together, if you see a summation in our lending housing business, we believe that we are close to 60 to 70% of our business what we have done. We in fact typically do 100 to 125 crore months of business, and I think we are close to 60, 70 crore right now. We believe that in the next quarter, as we see, I think three things have happened. People worried that the intensity, spread, and duration, the longer it lasts, the more is there going to be a problem. And that was actually the governor's address. But actually, I am finding that the more it lasts, let's call it ISD, the more it lasts, the lesser is the fear factor. Because the more you see people recovering, then you start to thought of like, you need to be cautious, but let's going on with life. I see the corona fatigue syndrome playing out, and I see that economies have begun to kindle. And I'm talking to one SME per day over last week. We've started this, and I was talking to somebody. There was a gentleman who was supplier of auto part in Nasik. He was supplying to, of course, the big three names. And I get to hear from a company which is merely 25 crore that I don't have skill or capability, but I am getting inquiries right now from Germany, from US, and there's a huge after sales which is opening up. All I need is how do I get this material on the supply side, and how do I actually go and scout for business on the demand side. So I believe that the world is resetting, it is not finishing, and we have to figure out where the flow and the direction is and perhaps align with the global momentum.
Thanks.
Sandeep, if I can come in over here, Sandeep, if it's okay.
Yeah, please.
Yeah, so I think Manish spoke about SMEs, and I think there is a very good data point that I thought I can bring in over here. After the green zones in the rural area, when we had the stimulus package and that credit guarantee scheme that came in specifically for MSMEs and the small business owners, there was a very big spike that you see on that side of the lending. The interest is there, and there is a big spike also happening over there. So it was correlated to what our government did, and we see that actually happening, and exactly what Manish said. So I thought I'll just bring that in.
So I'll just add on, Naveen, to what you mentioned. We work very closely with government and NCGTC as well as SIDBI on some of these schemes around Atmanirbhar. So what we have done is that done a complete digital delivery, which means that including your agreement signing, the capability was developed over last 4 months time, where our employees can be at home, customer can be at home. You can zoom in into a customer's house or his office and talk to him and take documents by scanning. At the back end, the rule engines are automated. We have algorithms which take decisions, of course, like most of us are into. And the delivery of the scheme of the guaranteed emergency credit line actually has been done online. We believe that from our population of 15,000 eligible SMEs, we thought that we will exercise prudent measure and only give it to 6,000 who are where you're putting good money after good. So 6,000 qualified, and we are happy to report that out of the 6,000 in 15 days time, we have already done about close to 1,550 odd loans last month. And this month we should be very close to 3,000. Our expectation is that 50% of most eligible customers, they will ask for the ECLGS scheme. And I think we should be achieving this number well within July itself. The other issue really is that has the Atmanirbhar scheme really served its full purpose? The government has said 3 lakh crore is the package. today's sanction amount is 1,10,000 or 20,000 crore. Disbursal is 72,000 crore. But where has this money gone? I think most large banks have ended up giving bulk and large ticket loans to few known corporates. For example, in our own organization, we have more than 4 lakh customers. And I would believe that more than 3,85,000 would be customers where average ticket size of loan is 4 to 5 lakhs. The scheme hasn't gone there. Point is, out of my 4 lakh customers, if only 3,000 get ECLGS scheme, is that enough? I think that's really where a lot needs to happen.
Correct. So actually, Sandeep and Manish, the important thing that Manish spoke about was, the rule engines were always digital. The use of the data was always there via the bureau and alternate data. But the key is the service and the consumer, right? The service is when the lender is ready to use, the video KYC, the India stack, and ensure everything is digital the way you're saying. But also the consumer should be comfortable enough coming to you. So I think that awareness, that training needs to go hand in hand, like I said. So, yeah.
Yeah, I think we're all getting there in some shape and form. And, the consumer is also learning, and so is the organization or the lender also coming up the curve in terms of delivery and all. And before I get in Pankaj here, I just want to take a minute to Shashank. The dependence of your industry is very high on the financial services industry showing its willingness to lend. Almost 70-75% of the auto sales today are loans from institutions. And then we are coming up with newer buzzwords like subscription and all also. Just a minute from you on this one.
Yeah, so I think I was hearing all the panelists, a lot of positives also have come out, and I would like to look at the positive sides of things post this lockdown. One, of course, is the bounce back which we have seen so far, but also we need to, as leaders, look at where opportunities lies for revenue maximization. And I think a lot of research on consumer behavior post-COVID indicates, at least for me, I find a lot of opportunities which we will definitely try to maximize. Sandeep is not the reason I keep smiling. You don't have to ask me, because otherwise I'll feel कि what you mean is क्यों तुम इतना मुस्कुरा रही हो, क्या गम है जो तुम छुपा रही हो?
No, definitely not.
No. So it's just kidding. However, talking of opportunities, and you mentioned subscription and finance. Now, finance actually is 80% of the retail which we have in the industry, and we do find that in some cases that seems to be a constraint. And especially when you look at banks where the reduction in rates are not in proportion to the repo rate reductions, which we have seen. So the repo rate reduction is almost like 200 basis points if you look at January 2019 onwards. But the reduction in rates may be pretty less. And I think banks are getting a little more careful because they are looking at revaluation of credit ratings of consumers post the COVID, because they expect the lower incomes to be lower. The positives, and I do respect their caution. And I think it's now getting a little better. Especially, I think it will be more clearer post this August 31st when the loans which were held, the loan repayment which were held, the moratorium finishes. I think it will become much clearer. Today, there are some banks who say, why do you want to take a loan for car when you are under the moratorium for your house loan or something? Are you capable of making the repayment? But nevertheless, we still find our penetration of finance, even in this post-COVID, is about 78%. It's a little less than what it used to be, but still positive. And talking of opportunities, one of the things which was mentioned when last year our industry was down was that the people in terms of the shared mobility, people were preferring an Ola, Uber, or taxi or fleet or things like that. And that seems to be clearly now with the fear factor. People are actually preferring personal transport over the public transport. And that's a great opportunity for now. It is possible that this there seems to be a little bit of contradiction, because people income levels is, as I said, maybe expected to be a little lower. Businesses may be a little down, as one of the panelists was saying. But it does point to a shifting downwards of demand, the telescoping of demand, as we call it in marketing terms, where people will downgrade their choices. It's a great opportunity for us because we are very strong in small cars. We are talking of people are now preferring subscription. And as you would be knowing, Sandeep, that we are also doing now a pilot on subscription quickly in response to that in a couple of cities. And the reaction, the response so far has been fantastic. And I can go on. For example, people say used cars would also be, and we see a big jump in the used car market as well. That is also something which is part of our True Value network, which gives a great source of revenue for our channel partners. We have, of course, the other ways like people, looking at digitalization for even the finance. I think one of the panelists was mentioning whether you can have the entire process of finance on digital platform. We have done that, and that is also something which we have already implemented. That was the critical part in the entire journey of car buying, where people were still going offline. We have now given that option. And I'm so happy that some of the banks, actually 17 of them, have agreed to be part of this. So it was a part of whether the capability, and now comes to that last point, which I think Naveen was mentioning about the buyer, the person who is actually asking whether he's technologically savvy enough. And for us, it's been a pleasant surprise that not only in the tier 1 and tier 2 cities, even the smaller cities, the digital platform seems to have worked very well. And we do believe it's a great opportunity, cutting down costs of transaction, at the same time offering great convenience to the consumer. So I see a lot of positives in what, even in the post-COVID, in the post-lockdown era. And while we are still negative over the last year, obviously, because we had a very bad quarter, as you know, but May was good. June was even better. July seems to be even more better. So I think we are getting there. We just have to see which way the sentiment moves on the COVID front. I see a lot of positives, and that's what I keep telling my people, that I say, look at the negatives and be realistic, of course, as Manak mentioned, be realistic, but then also don't ignore the so many positives which are available. That is, I think, a key for motivation of manpower. And that's another opportunity to make our people more resilient, to make our people more strong for the future, for any adversity that we may face in the organization in the future.
Yep, thanks for that. And you mentioned about technology, the customer embracing it, as well as the lender and the organization. I want to bring in Pankaj. Pankaj, you come in at the last, so you get extra time for that as well. And you can. This is one organization which I've seen embracing the technology side so well, the whole process. And I was reading an interview that Vibha had given the other day about her being very optimistic with the recovery that is coming through. So how do you see all of this translating into benefits for your business, Pankaj?
Sandeep, thanks for getting me in here, and thanks for the extra time as well. We in life insurance, I would say, have been relatively lucky given how the entire economy has panned out in Q1 for India Inc. If you look at life insurance industry overall, we were just about -15, -20% in total premiums in Q1. If you look at health insurance, they were actually plus about 16% or so in Q1. So obviously there is something that is playing in the consumer's mind, which is impacting the way they spend their money. So the composition of the wallet is indeed going through a change, and that change might impact different sectors in different ways. And again, in short term versus long term, the manifestation might be different. Having said that, those organizations which have been at the forefront of digital have been getting some benefit even in the current environment. We work with a lot of partners, as well as our own digital journey has been underway for almost 5 years now. We have seen that consumer acceptance of digital is very high. So digital and data are definitely very, very common themes that we can see running all around. And these are the 2 Ds that we all talk about. But I also feel there are many more Ds that are happening right now in the middle of us. And I would want to talk of some of those, how they might impact our respective industries over a period of time might differ. but these Ds are coming our way is my belief. In the spirit of people using acronyms like VUCA and the Rs, I will be using Ds to talk about what I'm seeing is impacting all of us globally. First D that we all have to be very realistic about is that degrowth is a reality for now, depending upon what estimates you look at. GDP for India itself is going to be probably -3 to -4% in next financial year. Some of the markets in Europe, I was seeing the numbers, GDP might be -10, -15, -20% also in the next 12 months. This means that we have to be prepared for a world where growth is going to be slower than what we have been used to in the past. That is also reflected from some of the surveys. For example, if you see the purchasing managers index, that still continues to be below 50%. It went really down in April and May. It has come back in June a little bit, but is still much below 50%. If you look at the consumer confidence data that RBI has published, people are still negative about where they see the next 12 months. Obviously, the current period is negative, but the next 12 months is also negative. So coupled with the GDP growth and the sentiments coming from the PMI as well as the retail consumer, we are in for a period of either degrowth or low growth. Second big thing that even Manish spoke about, and I'm also seeing it, that of deglobalization. All of our corporate life we have spent where globalization has been a predominant sentiment and movement across economies. However, if you look at how the US-China trade discussions are coming about and other tensions, global trade is reducing. If you look at India's current account deficit, the latest numbers, our import just fell off the cliff. Exports also declined. So overall, there is a negative. If you look at what is happening in some of the Middle Eastern countries about their own visa policies, US visa policies, the way the remittances have dropped from some of the countries, there is a trend of deglobalization. And I was in a webinar a couple of weeks ago, and one thing that came out is that globally, we need a policeman to drive globalization. It used to be the UK just around the First World War and that period. In the 30s, there was massive deglobalization because there was no world superpower. 50s, 60s, 70s, US was a superpower. It drove a type of globalization. Today, the rules-based global world order is not there anymore. It is like the biggest superpowers are in conflict with each other. If US can withdraw from WHO, we can all imagine where we are exactly in terms of globalization. So it is going to impact us. How it impacts our respective industries, we will have to see, but it is coming our way. Another big thing, because of digital and the way people have a DIY mentality and direct type of interaction models, is that of disintermediation. I would give a very simple example. In Mumbai, Alfonsos are a highly preferred breed of mangoes in the summers. And typically you get them through middlemen who take their cuts and deliver to the mandis, and you get it from your local vendors. This year, a lot of those producers of Alfonsos directly tied up with the societies, society office bearers. They brought their truck and people went and bought it directly from the truck. And this is just one example of disintermediation. I was talking to my neighbor. He invested 2 crores in some mutual funds with a distributor about 3 years ago. Obviously, he has not seen any returns. He was finding it difficult to engage with him because of the current lockdowns. And his wife just downloaded the app and gave him the statement that he was looking for. So from the convenience with which you can download a statement to making the investment yourself is just one step. So disintermediation is coming our way. If you look at Robinhood investors, which are there in the US, in India also, the type of growth in demat accounts that we have seen, concurrent with the reduction in the SIP inflows, it is again telling me that disintermediation will impact all of us, and we have to be prepared for that type of a world. Even if in the entertainment industry, many of the mega movies have sidestepped launches through multiplexes and directly going to OTT. So disintermediation is another big D that I'm seeing is coming. Third D is that of disinflation. If you look at the type of money flow that has happened in terms of monetary stimulus, US, I believe, is something like $3 to $4 trillion of monetary stimulus. If you look at India also, depending upon how we count it, we might have a different number, but a couple of 100 billion type of an impact we can assume even in India with all the stimulus that has come up. However, the inflation number has barely moved. I was looking at the US data. Wholesale inflation in the US is actually down by something like 0.8%. So it should have been up by about 1.6% as per the usual trends. So delta is about 2.4% in the inflation, coupled with massive amounts of liquidity inflows. Interest rates are at an all-time low. Oil prices, we all know, India's budget is made using a dollar assumption of $65. Right now, expectation is something like average of $35. So $30 per barrel benefit coming our way. And I was reading somewhere that $1 reduction in global oil prices has an impact of $1.5 billion on India. So India in a way gets a free check of $45 billion because of the global oil prices being low, one of the few silver linings. But overall disinflation is coming our way. If you look at the data on US, data on oil, data on how people are negotiating their rentals, the way they are negotiating the fees, even school fees, there is disinflation coming our way. Another D that I'm seeing in the financial services sector that we have to be prepared for some period of time is that of delinquencies. So whether it is EMI payment or it is the payment related to the life insurance policies you may have bought earlier, but you need to pay the renewal premium, or it could be something about whatever risk perception lenders have. Like Manish talked about, that the smallest 3,85,000 of the customers who are less than 5 lakhs have not really got the benefit of further injection of loans. And my feeling is it is reflected by actual delinquency as well as fear of delinquency that we might have about some customers. Again, Shashank was talking about interest rate transmission not having taken place. The transmission has not taken place because while your cost of funds may have gone down, your delta that you need as a risk premium because of actual delinquency or fears of delinquency has gone up. So the transmission on interest rates has not happened because of delinquency, actual or expected. Another big trend that I'm talking about, another big D, is that of downshifting. If I talk about the average ticket sizes, whatever I see in our industry, whatever I read about in mutual funds, and Shashank spoke about smaller cars, FMCG companies talk about 5 rupee biscuit packages, or used cars being spoken about, there is a downshift that is happening in the consumer's wallet share. And downshift, in my opinion, is a reflection of the degrowth as well as the low sentiments and confidence that people have. How it will reflect us in the future, we have to be prepared for it, but downshift of customers' expenses coming. One thing I heard, I'm not sure how much it is true, my kids go to a medium category school, international school in Mumbai. There are schools in Mumbai that have fees of 15 or 20 lakhs. It seems that a lot of kids whose parents were paying 15 or 20 lakhs of annual fee, they have moved to my kids' school, which is more like 5, 10 lakhs, 15 lakhs type of fees for a 2-year course. So there is a delta that has taken place in the consumers and manifestation of school fees also. Possibly, I'm not sure, but it is something that I heard. Another D I want to talk about is that of customer. I don't want to use the word disloyalty, but when I say consumer disloyalty towards a brand, I mean their willingness to try out a new brand. Whether it is because the availability of different brands has been at a different level because of COVID-related impact, or you want to buy a different stuff, a different item because of need, or because your price expectation of a brand has changed, consumers' willingness to go for a different brand has gone up. It is reflected also in some data I was seeing from Google search trends. But we have to be aware that if we believe that customer is loyal to us because of the brand, it is not going to be true anymore. You have to keep earning that customer loyalty in the new world as well. Another linked theme to what I have spoken about is that of deleveraging. If you see a lot of companies, they have tried to get additional capital in their balance sheet rather than taking more loans and more debt type of instruments. If you talk of consumer also, I believe that because loans have sort of slowed down over a period of time, it will lead to some level of deleveraging. That has an impact on consumption further down the line if deleveraging happens. But my belief is that is one thing that we have to be prepared for. The disinflation is actually because of the demand shock, which has impacted different industries differently. Demand shock, in my opinion, for the COVID negative sectors that Manish spoke about is probably going to continue for some more time. Another thing that I'm going to get into now is that of what is happening in customers' mind. Another D that I see in the customer's mind and in our individual minds is that of disquiet. A lot of us are worried about our health, about our jobs, about not being able to meet with my friends, about teenagers who wanted to socialize, who are, let us say, just imagine teenagers in their early teens, late teens, who are stuck at home, which is their prime years for going out and talking to people. There is a lot of disquiet in the minds of people. It may have an impact of mental health. It already probably has some type of a mental health impact. We have to be aware of the people, our consumers, when they talk to us, our employees and team members, when they talk to us, that yes, there is an element of mental health that might be playing out right now. Some early search trends from Google again indicate that people are searching more about philosophy related stuff, about things like how do I meditate better, etc., etc. It is about consumer disquiet, or the people disquiet in the people's mind. They are not just consumers, they are people, and there is some level of disquiet in the people's mind. Another trend which I feel probably is not reflected fully in India because the data availability in India tends to be poor, but I was reading somewhere that if you look at the New York market, New York property market, the prices in Manhattan apartments have actually gone down, while the prices in the Hamptons, which is like their Lonavala, have gone up. The median prices in the Hamptons in the current crisis have gone up. To me, the D that is reflected is de-urbanization. Is it coming to us in a big way? If we have work from anywhere coming, as many of us have experienced, work from anywhere has given us decent productivity without any big issues that we were paranoid about earlier. People have the option of staying anywhere. Would it lead to people moving from metros, which have been hubs of innovation for the last couple of centuries in a way? The metro corridors have been those hubs. Is that global model going to change subsequently? And that is something that I feel is possibly coming our way with increased digitization and health fears, and some of the prices, as I talked about, Hamptons versus Manhattan, reflecting that. So the net summary that I want to point out here is that this degrowth is probably continuing, or if not degrowth, slow growth, because consumer confidence is limited. They are voting there with their wallet. We have to acknowledge that to some extent. There is going to be a shift in how people live, and each of our industries may be getting impacted differently. It is all going to pan out over the next 12 to 24 months. We all have to be highly agile in responding to this world.
Sandeep, may I?
Yeah, Shashank.
Sandeep. So I think what Pankaj ji has listed out, I think quite real. All the D's which he has listed out, quite real. But we must also look at the other side. So if we look at all those D's, largely those are very real, I acknowledge, and we need to be realistic about it and to take care. Some of them, however, may not be permanent, and the human sentiment changes very fast. We have seen it in the past when the SARS came in Hong Kong and some parts of the eastern of the east. The consumer behavior also reverted in many cases. Of course, there are some points which are permanent. Then there are some issues which are probably going to be a little more transitory. The thing is that do we continue to, of course, you have to look at them and look at the very realistic thing which Pankaj. So I would like to add the other D, which is do the positive and don't the negatives. And I was I'm happy I'm staying on the first floor because otherwise I would be tempted to jump off if we see all the negatives which are actually quite real. But let's try to look and make something good out of it for everybody in our industry.
So Shashank, actually you made a very, very good point. In fact, I would also like to add, when I said look at the positive of the VUCA, Sandeep, one of the key things is that, yes, it's a very tough market. It's, unprecedented, right? No one has seen it. But is this the time to actually innovate, to make everything real, understand, what is happening today. If there's this shift happening that Pankaj is speaking about, am I partnering? Am I collaborating? Am I innovating? Am I bringing in something that will make me the leader in this change that is happening? I think so. I think these 4 months has given us a lot of time to, reboot, like everybody says, but it's the process, right? Eventually, it is the product eventually, and it is the execution. If you bring it down to the basics, I think we just understand it. We are agile enough, like Pankaj said. I think there are positives also.
Yeah,
And I think Sandeep, I'd just like to build off that. And one of the things I also see is, when any crisis happens, whether it's something that lasts 4 months or a couple of months, I think it basically exaggerates and accentuates trends that were probably already there. So digitization was always a trend. Consumers are always looking for better value. There was a growing trend of people thinking more deeply about issues. Pankaj mentioned about people thinking about meditation, how to deal with their lives. Work from home was a trend. I think many of these are getting accentuated. And I think what we're going to see is this will throw up organizations and people who are really going to play on the front foot and say, look, how do I now almost reinvent the value equation for consumers, offer them what they need, for employees?
Absolutely.
And we're going to see a sifting between those who win by playing on the front foot and those who hunker down and get, to add a D, get defensive, are going to lose. So I think this is, in a way, they say every crisis is an opportunity. I think this is an opportunity for people as individuals, for leaders, whether we are business leaders or in the sphere of politics or in government, to really play on the front foot, because I think that's how we will progress. This is not a time to be defensive and hunker down. Take stock of those realities. And I really like the optimism that I'm sensing from a lot of the other panelists.
Yeah, and the Pankaj kind of created a new D, the dimension I would use here. We've dwelled into the second part of the discussion. The first part of the discussion was obviously how we see the recovery happening, and some of you have already moved into the second part.
Can I just take 1 minute?
Yeah, please.
So I do believe these somehow came out as depressing.
I mean, if I were to hear Shashank,
first floor. I'm at the first floor.
Part and look at the do part. So clearly, but you opened up a new dimension.
Yeah.
I just wanted to open it up to you guys. Maybe Manish has been silent, listening, probably enjoying the balcony view. Our organizations responding to all of this, and in the interest of time, I'll just request each one of you to take 2 minutes only by the clock. Don't force me to behave like a headmaster here, but just 2 minutes each one of you. So that, and just Deepak send me a message on the other group as well. Just try and answer some of the Q&As. There are specific questions you have to yourself while the others are answering on the screen. Maybe just take 2 minutes answering some of the Q&A questions. So Manish, just 2 minutes on how do you think organization would respond to whether the shape of the recovery curve or the various Ds that Pankaj has put forward?
Thanks. I think I will first talk on a lighter note and then get into a little more heavier subject. I think Pankaj Gupta should seriously follow Ekta Kapoor model and actually start his name with D. So we may call him Dankaj Gupta, whatever, that is because there's so much of a D over him. And I think he has brilliantly put forth many points and they all seem real. And I would actually say that when I mentioned that a lot of retrenching is happening and migrant workers have moved from here to their basic home. And we have seen very clearly a population rationalization, which is happening. So I feel that deurbanization is a very real phenomena. And if people stay longer over there, many of them will not come back. On the other hand, in the hinterland, what we are also observing, that the need for construction of your own house, for example, if you have a 2-storied house in a village, you want to create one more higher floor because people have come back, that need for self-construction apartments has begun to grow. So I think these are all very real phenomena. Coming back to what organizations are doing, very clearly, I think almost everybody, and so have we, completely gone the digital way. And I think digital analytical intelligence and now building further in real projects on AI and ML is really something which is happening. what we have done on our bit is that there is a massive need to be agile and be lightweight. I think we have shared a lot of OPEX, and I wouldn't be surprised that if we cut down our OPEX by more than 20%. And we have kind of, these are the times where you cannot bulk up weight and really carry an organization. I think you have to be lean, you have to be nimble, you have to be digital. This is just the way of new life. We have clearly done that. Second, what we have done is, at Pankaj rightly mentioned, and I'll keep referring to his Ds, is one of our businesses, we were 100% channel. In the month of June, we are 100% digital. So the extent of transformation has such a deep acceleration we can't talk about. We have actually gone and reskilled our entire workforce for direct selling. And we have found that our teams not only opened up brilliantly in terms of direct selling, they have done wonderfully well. And today they are connecting with customers. We have been able to pass digital benefited transfers into customer account by connecting. So I feel we have very simple mantra, three simple mantra in our SME business is go secured, go digital, and go direct. So I think this is something which we will swear by and live by. And this looks like the new mantra for the organization.
Thanks, Manish, and thanks for the time. Watch on the clock as well. Shashank, you want to step in, especially on that point in terms of whether this is going to be a cost-led strategy going forward, or you want to go the revenue focus, coming out with newer models, targeting the Bharat.
Yeah, so I think it will be a combination. Obviously, the easier way is to drastically cut costs. The other way also, and I think it's for the long-term health of organizations, it's also to look at opportunities for additional revenue, which is what we are also trying to do. Cost cutting, of course, is essential. And I completely agree with Manish ji when he says we have to be agile and flexible. And I think we have to drive this in our organization, to change the minds of people, to look at this as an opportunity, not only to rethink, recalibrate, rebuild, and also to take it as a opportunity to question every process that we have been following in the past. So if it was offline, if it is digital, if it was channel, or whether it could be direct or whatever, if it was leverage, then it could be deleverage or whatever. We need to look at every process and challenge that process. That happens almost even in normal situation, but we don't do it with that passion and with that sense of urgency as such conditions as the ones which we are facing bring us to do it. So that is what we would be emphasizing within our organization. Question every process, question every the model which we are following, and also try to look at maximizing the revenue, looking at the opportunities which are available, certainly in this landscape.
And Shashank, that is something that has come out in the survey as well very clearly. And that's where I said the kind of respondents that we reached out to mattered, because one of the charts on the survey very clearly shows organizations, in fact, two charts show that organizations are not thinking, at least the senior leaders are not single-minded focused on cost. Cost is definitely an item, but I think there is a very heavy bias on getting the revenue back. In fact, on one of the questions, absolutely. 66% of the respondents say for them challenge will be revenue. And that's absolutely. Where more energy and focus would be there. Manik, you would want to come in and say, because the space, as you said, is clearly been a stable space, more for the long-term play. How do you see that getting reaffirmed during this time?
Well, I think when you look at the broad world of FMCG, fundamentally, no consumer products company can deliver sustainable value long-term without growing. That's how it works. Consumer product space is dependent on innovation, depending on getting consumers' loyalty or brands, dependent on meeting their needs every day. So I think as I think of the FMCG industry, over a long-term horizon, there is no question. The only way of delivering sustainable shareholder returns and profits is to grow. So the two go hand in hand. I think it's only somebody who's incredibly myopic and focused only on what happens in the next quarter is going to say it's all about cost. Having said that, I think what the FMCG industry needs to do is pivot and understand what does it take to keep delighting consumers with some of the changes we're seeing. And a lot of people have talked about digitization, e-commerce. How can they embrace it, and what does that then mean for cost to serve? What does that then mean for how supply chains work? What does that then mean for how they work with customers? Second big trend that's happening, India is always, you talked about India and Bharat. I think what we are starting to see over the last couple of months in FMCG is it's Bharat that's rebounding first. Rural consumption growth has been significantly higher than urban consumption growth, and there is a skew coming towards lower price packs. So I think one of the challenges will be, how do you then drive cost innovation so that you're delighting consumers but continuing to make your products available at the right price points? So I think the name of the game for FMCG will be continuing to believe in and commit to that growth, but pivoting so that you can innovate in a way that continues to delight consumers based on where they want to shop, where they're receptive, the packs they want to buy. And I think it's going to be that balance that the whole sector will have to keep in mind.
Yeah, I think very true. Naveen, you would want to come in and share some perspective on how are organizations responding to what we see happening outside? Again, just 2 minutes by the watch.
Sure. So thanks, Sandeep. I've heard the other panelists. I would like to bring in Sunil Gavaskar and Shrikant. Okay, deadly combination, right? One knew how to play by the book, exactly by the book. One didn't know what is written in the book. Okay, so completely different. I think we as an organization are playing that. We have our core. We are going to protect our core. We are going to develop our core, make our core stronger. But at the same time, digital first is our Shrikant. He is going to come and hit the ball out of the park. So we are going to make it completely digital. We are going to help our partners be completely digital. We are going to see what is required. So across the globe, wherever CRIF has different products, we are bringing it into India. So that, may it be just not underwriting, it could be alternate data, it could be anything that actually requires to take us to the next level. Undoubtedly, our, infrastructure, our IT team, everything is going to be in protecting the core. But thereafter, you have to look at this as an opportunity and get a Shrikant in and hit the first ball at a 6. So you'll defend, at the same time, you'll attack where you actually can.
Very true. And if I were to now get Pankaj come in, he'll say forget the Shrikant and the Sunil Gavaskar because they start with an S. He's going to go with the Dhoni for sure. So Pankaj, you want to take a shot on that, the Dhoni style?
So my belief is that as a country in India, we are at a very low per capita GDP. If you look at my industry, life insurance, we are actually really at the very starting stage of customer penetration. So growth objective is a given for all of us by default. And whatever we do, finally, we do somewhere keep in mind what Jeff Bezos said about day one. It is always day one. And that is how we would want to behave and believe in all our actions. Having said that, we do have to be aware of what is changing in our environment. So from that perspective, as one of the panelists earlier said, it has to be a mix of both. I think Shashank was saying. So cost should be one of the objectives because it is a controllable. Market is not a controllable in the short term, at least. You may have your strategy and initiatives, but it may not be responding in the short run. So you do have to keep an eye on the cost. And along with cost, another C I would say is here conservatism, which is either in consumer's mind or in the organizational projects, the way you want to pick up big mega projects. There is a level of conservatism required along with your eye on the growth. So that is how I would put as the contours of the strategy that we would want to pursue as of now.
Yeah, very true. And I think if I were to just maybe take a cue from each one of you, these strategies across organization would fairly be similar. I don't think if we were to, let's say, the 4 pillars, whether you look at organic and inorganic growth, or you just want to lie down for some time, or it's going to be an aggressive revenue ramp up or a cost focused strategy. If these were the pillars, my sense is most organizations are going to adopt a multifaceted approach. I don't think anybody is only looking at one. The heart of decision making is I think common or across. Conservation of capital, obviously is going to be there, because at this point of time, cash becomes king for sure. Similarly, if one were to look at the risk management practices across organizations, I think they will change. There will be a combination. So I agree with Naveen also to a certain extent, or to a large extent actually, that the core will obviously have to be protected at all points of time. But you will need outliers to start showing up the true color, just to be able to address. And at times you may not go by the rule book to probably capture an opportunity out there. The digital side actually has been something that each one of you has kind of embraced, and that in fact, if I were to look at the survey we've done, 95% of the people are responding that digital is the way forward. Actually, I was trying to find out who were the 5%, but since we said we'll keep it confidential, we didn't want to find out. But there is a very, very clear shift that is visible, and those last 4 months have actually, and from the traditional organizations as well, I think the way they're embracing the shift towards technology, it's kind of it's very encouraging to see that. So something that any one of you would want to take on that how do you see how is the speed there going to really make a difference, while all of us realize that it's there? And I can see Deepak also coming in. Maybe Deepak, you want to you've been a silent spectator. Just your take on some of the items we've discussed, and your name starts with a D in any case. So let us have you with the last word from us, from the panel here.
No, I think what, like everybody said, while technology is must, but it's not the only solution. I think it is also the people, their skills, the abilities that will help to rebuild the damaged economy in the country. So probably I would say the core is as important as technology is, but yeah, both needs to go hands in hand at this point in time.
No, I think we've had a very engaging discussion so far. Any closing thoughts anybody would want to share for the larger audience before we hand it back to Deepak to
So maybe I do that just less than a minute. Basically, I think empathy is going to be crucial during this time. Understanding customer is going to be crucial. Customer may be a B2B or a B2C. And also at the same time, motivating and ensuring that there is no stress, in the mind of our team members, in the organization. I think while all this is important, business will grow. I think it doesn't matter if it is a U, W, V, eventually it's going to come back. So I think basic values is going to be crucial.
Great. So Sandeep, your final thoughts?
I think I've been pretty lucky to get a very diverse panel and hear views. Some of the views are very enlightening. I'm sure they are for me, as they would have been for some of the audience as well. It's always interesting to hear perspectives from peers, from industry leaders like the panelists that we've had. So thank you, Deepak, for giving us the opportunity. And I particularly like what Naveen said at the end. The empathy becomes very, very critical. So I'll probably take the words which are before D, the C and the E, and I'll leave the D to Pankaj because he's kind of taken a trademark on that. So communication in these times, communicating with people becomes very, very critical. So that's the C to me, and the empathy is probably the E here. So on that happy note, I would want to thank all the panelists for taking out the time, having a wonderful discussion. Thanks, Shashank, Naveen,
Thank you.
Thank you.
And Manish, and thank you, Deepak and Hari and CEO Lounge for having us on board.
No, thanks, Sandeep. I think very, very balanced and outstanding conversation. Great insight. So thanks to all the speakers and panelists. I think it was a great learning. I really enjoyed this and did make some notes, which I will share with all of you as well. And I can only say it's time for us to step up. So let's do that.
Thanks so much.
Thank you.
Thank you.
Bye.
Thank you.
Thank you, everybody.
CEO Lounge, I'm going to take 5 more minutes from everybody. And I think it's a bit of a tradition here at the at our webinars.
Cup dega, coffee cup dega हमारे को?
आप तो बड़े कप जीत चुके हो सर, आप क्या करोगे कप का बताइए. But I feel that it is just for a leader. It is also important to have a bit of a purpose in life. Also, the other side, you all have followers, and they all want to become like you. So it is just not about work, work, work. There also needs to be the other side of the things, and they all want to know you a little better as well. So let's make an attempt of to doing this. And let me start with Pankaj, because Sandeep, you gave the last opening to Pankaj. Let me give an opening to Pankaj. Yeah. So Pankaj, you've been encouraging people that they all deserve a life that they need to live to the fullest, even after retirement. And if I could ask you, whenever you hang up your corporate boots, what kind of a life are you looking to forward to living in your retirement?
Deepak, it's a very, very interesting question you have raised, and I have been actually thinking about it over the last couple of weeks in my own mind. And I read recently that you have to think of your life in intervals of 7 years, because you probably reach a transition point every 7 years in your life of some shape or the other. And given I'm from the life insurance industry, I do look at mortality data and how people's lifespans are changing. So I believe that I might have about 4 such 7-year frames with me. And actually, I got really confused after the first 7-year time frame. What exactly would I do? And when you think about those things, you think about your family, your finances, what has been your passion, where exactly have you reached at that point of time. So when I close my eyes, I actually think of either a mountain or a beach. And that is where I would want to be. I would want to be very productive till the last years of my life while thinking in 7-year time frames. Now work from anywhere, work from home has opened up very many new opportunities. I was talking to an ex-colleague of mine. He is moving to Canada and he has picked up a job with an Indian startup. And he says he can do the solutioning and the partner engagement sitting in Canada for Indian customers. And that does open up a lot of possibilities of what you want to do. So I would probably want to have either 1 or 2 of those 7-year time frames in the corporate world. So either after 7 years or after 14 years, I would look to move on from the corporate world and live the life that I've been thinking of when I close my eyes.
Thanks, Pankaj. I think it's a wonderful perspective, because to break the life into 7-year period, I think good one. I think it's really changed how I'm going to think about this moving forward. Naveen, beaches, water that's a person you are. So tell us about your favorite beach holiday. I mean, which is your favorite beach? Is there an incident that's got stuck with you? I hope you had your swimming trunks always intact in the water waves. Anything funny that has happened with you out there? Yeah.
So one thing I should tell you is that for the last 14 years, year on year, we have been to Goa. So not anything very fancy, very close to where we stay. Either, when we were in Gurgaon or now when we are in Bombay, it's with family. So 4 of us for sure. Other families tag along. So I think Goa comes first in my mind whenever we are looking. In fact, even in this lockdown, if they allow us, that's where I want to go first. Something funny, because every time we go back to the same place. It used to be called this Park Hyatt, which is taken over by ITC. Thank God they didn't change the staff. I had built a rapport with everyone. Okay, so the kind of crab I want to eat or the wine I want, they kind of knew it. Just the brand changed. And every time a family member or a friend came, they knew that, they had to say, Chandani ke room par laga lo. So that's what I can remember. And beaches will always be beaches.
Fantastic. I just hope the ITC keeps upgrading you to the suite every time you go down there, Naveen. So
Unfortunately, not even once.
Manik, you are highly skillful and passionate. And if I could ask you, when did this thought of writing struck you for the very first time? When did you really thought that, yeah, you're going to become a writer?
I think I don't know exactly when it struck me, but it was an inherent part of my growing up. So, growing up, my father was in the government. We moved a lot. Every 2 years we were moving. And, back in those days, late 70s, early 80s, I developed a love for reading. And I think that led me to love telling stories. I had an overactive imagination, and, I had a imaginary friend who sat next to me in grade 7 for some time. I wrote a diary about how the world ended and dug up our front yard and buried it so future historians would find it. So I had an overactive imagination. I loved storytelling. And when I was 11 years old, I read an interview by Stephen King who said, the moment somebody pays you a cent for your writing, you are an author. So I had some stuff written away at home. I solved the next term's maths textbook, stapled it together with my writing, photocopied it and sold it to my classmates we were living in Canada at the time, for 50 cents a pop. So I came home with the $12.50 I'd earned, and I told my mother, Ma, today I've become a published author. So I think that's when the thought came into my mind that, telling stories and having an imagination is wonderful, but the joy of sharing that with someone else. And that's when that thought really came in my mind of,
Nice.
telling stories as a way of really communicating and connecting with others.
And how old were you when your first book got published?
My first properly published book, not my stapled homemade book, was published when I was in college, in second year of college. So I must have been, 19 years old at the time.
Awesome. Many more to you, Manak. And do you still practice your karates? Is that another?
We do, and that's one of the ways in which one of my learnings over the last 4 months is we can be incredibly adaptable, and technology is a tool. So my son also learns karate. So he's 12 years old. He's got his black belt last year. So we are now practicing karate together with all the other kids over Zoom meetings. And so twice a week, we're there, our sensei is there, we're practicing. So literally anything is possible if it's important enough to you, if you're passionate about it, and you find ways of making that happen. So we are doing it all virtually.
Wonderful. And Manish, you are a fitness freak. And before I get to my real question to you, I want to know the recipe of the juice that you were drinking this morning here.
Whatever he tells you, don't believe it had vodka mist. I can tell you for sure.
Okay, all right. So this actually is a very simple juice. I have a proper regimen. I mean, I think the morning I eat only during the 8 hours of the day, or at max 10 hours, and don't eat really for the 14 to 15 hours. So this juice is actually my breakfast, and it has got I would say sprouted moong as well as chana, beetroot, and apart from that it has got ginger and a host of few other veggies, but it's completely veggie stuff. And as the first thing in the morning, I think it's my power snack and it makes me feel good.
मनीष भाई अब सच बताओ, अब सच बता दो.
अच्छा भाई बता देता हूँ, ये ब्लडी मैरी है.
बस अब ठीक है.
So Manish, we every year we have a nationwide program called a CEO Mastership. So start getting your skills better on that. So I'm sure you want to come back and prepare this Bloody Mary for all the other bloody people out there. So Manish, one more thing. You've been talking about this, that the opportunity for working with Magma is actually like pursuing your passion. But tell us, is your family also thinks that way, or do they want you to pursue some other passion other than Magma?
You're asking tough ones, and they are luckily not on webinar right now. No, I must say that my background is that I come from Allahabad, a small town. It's a small, sleepy town, but it's very cultured. At a point of time, it was called Oxford of the East. My grandfather was a revolutionary, and he was very active at that point of time in the freedom struggle. In fact, that's the only thing he did all his life. And so I come from a family which is very close to seeing the SMEs in the affordable housing space and the travail and challenges of people there. And the secret, there's no secret. I mean, I think my own father's business was a struggler SME, and which finally collapsed one day. And I just felt that for such a small issue like liquidity starvation, why should any fail and why would it impact family in the way it could? So it somewhere became intrinsic to me that one day probably we'll go out and help as much as possible to people. And in fact, I love talking to customers. And every time you solve somebody's problem, it gives you a very deep inner peace. So my own inner scape is a little more, I would say, harmonized whenever that happens. So I think I just can't stay not connected. The amount of benefits you can transmit to your customer, which we are doing, by the way, by the government's Pradhan Mantri Awas Yojana benefits or the interest subvention, which the entire team is doing. It's in a sense, it builds a lot of gratitude and it makes you a little more closer to the soil, and which is what kind of gives you more joy.
Nice. And
Just stepping in.
Maruti and you are synonymous, and there is no doubt that you're so passionate about Maruti that made you stuck there for over 3 decades. So I'm sure during this lockdown, you would have really missed going to your office. I'm just assuming that, So what kept you busy during the lockdown? Was there something interesting that you did that kept your smile absolutely as wide during that period? Did you cook? Did you connect with your old friends? What did you do during the lockdown being from home?
Yeah, so first of all, Deepak, the lockdown lasted only April. So from first week of May, every day our office is open and we are going to office since the 4th of May. However, this period of the lockdown, yes, I have been reading a lot. That's actually my first love is reading. And I don't know whether I must mention it here because I'm a little apprehensive. Actually, I have always wanted to figure out the world. So I have been reading about books on science or genetics or astronomy or the physics and so on. And that has been actually throughout my life, I've been doing it. Maybe I'll find more time post-retirement to try to figure it out because I haven't figured it out. I'm told nobody has figured it out. So, but it's a great pursuit, and probably do things like travel post-retirement, etc. But during this time, the lockdown time, I could read a lot of really great stuff. And I was introduced to, I heard about it before, and to an author called Roger Penrose. He writes books on science and philosophy connected together. There's a great book. It's called The Road to Reality. That's the one book I read. I recommend to everybody here, as also to all the participants in the conversation. And the other book, which is really, I haven't completed it, so, I'm halfway through, is Fashion, Faith, and Fantasy. It tells you about your how even with science and an application of science in your mind, you are actually sort of inclined to certain things regarding faith or fashion or fantasies. So I think I will try to spend more time post. I hope I'll continue for a long time because my natural thing is to be in action. So that's what I'll try to do. And hopefully I'll have more time later on for those pursuits.
Fantastic, Shashank. And the day you decide to publish a book, you know whose door to knock. That's Manak, and I'm sure this 7-year period will help you to also plan what next and how next. And Sandeep,
thank you.
Is it cricket? Is it table tennis? Or is it bowling? Which is your favorite and the first love?
It changes with time. So come September, I start liking cricket all of a sudden because it's time for the CEO Cricket Challenge. So I keep shifting. I try and cross the bridges when they come to. So come July and January, it moves to table tennis because that's when we have our internal sports day in the organization. And bowling, I'll share something offline because it's got to do with the balls. So avoid the discussion here. But yeah, the last 2 trips that I've gone out internationally, I bought Canada and Hong Kong. I got bowling balls for myself, and I just want make sure that they're oiled regularly because that is something that I'm missing right now.
Good, but you still have to lift the CEO Cricket Challenge trophy, Sandeep.
I've been missing it for
Just
last
to
two
keep
times.
rubbing that into you year after year. Yeah.
Yes.
You know,
Yes.
Sandeep, can I put you on a spot and ask you one more question? And you please answer this question. Don't find a way not of answering this. Which is your favorite car and why?
My favorite car.
Yeah.
My favorite car. Okay, I'll tell you a story along with that. My favorite car.
Well, Sandeep, see, listen, you'll have to tell the name of the car first and story can come later, man.
Discovery. It's the
Sorry?
Land Rover Discovery, the car that I drive. And we were doing an internal survey trying to map the manufacturers basis the car, and I really blame the team. They bloody put the manufacturer and the car as orange category. You know, green is the best, yellow is the second best, orange and red. I was pushing them. Don't try and think of putting Discovery in the red zone. But I can see Shashank smiling. Maruti was obviously up there, green, green, green. But they put my car into the orange category. So that's the car I love.
Nice. Great. So, gentlemen, I think it's been an outstanding conversation. You know, great insights. And I think the 90 minutes didn't really do the justice with the kind of the knowledge that you all have and you wanted to share. So probably in next few weeks, we'll invite you all again and to share something more, something a little different. And thanks to all the audience for a very, very active participation. And I will see you all again next week, same time, 11 o'clock, with a new topic, new set of leaders to discuss about, how do we restart? And we'll continue this topic for a while now. And until then, take very good care of yourself. Stay healthy, stay safe, eat healthy, and
Thank you.
namaskar. Thank you.
Thank you.
Thanks so much. Great meeting all of you. Bye.
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 Thank you. Thank you, everybody.